Hi everyone, it's Mark. Welcome back to my channel. Today I'm going to talk about the stock market and whether it will crash in the year 2021. Additionally, I'm going to talk about whether it matters at all if I'm right or if I'm wrong. Here's a hint. It doesn't matter, and I'll explain why. Finally, I'm going to talk about steak. So if you like making money or you like eating meat, then this is the video that you want to tune in because that's where we're going today. However, if you're a vegetarian or you don't like steak, I don't want you to feel left out. So whenever I talk about steak, I want you to pretend that you heard kale instead. I am super pumped to bring you all of this information. First, if you could help me out, if you haven't already subscribed, that would really mean a lot to me. And as always, if you could help me out with the YouTube algorithm and smash that like button. The stock market is just an online marketplace where individuals or companies can buy little pieces of other companies. Those little pieces are called shares of a stock, and each share represents a tiny piece of a company. Companies such as Walmart or Ford, GM, Amazon, they all sell their shares to the public, and you can buy little pieces of those companies. Each of those little pieces or stock shares goes up or down depending on the business prospects of the company, how much money they're making or not making, and more importantly, they go up based on what the general public believes the future prospects of those companies are. The stock market is a future-looking index. So it doesn't matter as much what you've done in the past or even what you're doing now. It matters what you're going to do in the future, and it matters what people think you are going to do in the future. That's what determines whether stocks of individual companies move up or down. Given that, what is going to happen? Well, the first thing to understand is that the United States economy is a consumer-driven economy. That means that all the individual people in the small and big towns, what they spend their money on matters in terms of the overall economy. If they're going out and spending a lot of money on groceries and clothes and cars and cell phones, that's good for the economy. It's more important than what other businesses do, what they buy, or what the government buys. So when people, individuals, have money and they spend it, that's good for the economy. Additionally, they're buying and spending that money on individual companies. So of course it's good for those individual companies as well. The important point being that if people have money, it's good for the economy and it's good for businesses, so it's good for the stock market. In 2020, the economy was doing well. It was growing about 4% a year, a little bit less, and then COVID hit, and all of a sudden, the economy went into a big tailspin. It went into the tank. It crashed. That was a year ago. What about now? First of all, COVID cases are on the decline. As you can see from this chart, individual infections have fallen from about 250,000 to about 50,000. That has happened over about the last 7 weeks or so. Deaths are also down, although deaths lag behind infections because people get infected, then they get sick, then they go to the hospital, and if they don't recover, then they die. So deaths will come down similar to this over the next month or so. As infections go down, deaths will go down as well. So both of those statistics are very good for COVID and for the economy, because when COVID goes away, the economy is able to open, businesses are able to open, people get new jobs, they get rehired, and most importantly, there have been a lot of people who have wanted to spend money on shows and concerts and movies and dining out, and they haven't been able to. When the economy opens full on, all those businesses will come back. All those people who have not been able to spend money will be able to go out and do it again. Additionally, as you can see from this chart, the COVID vaccine is starting to roll out. So it's not just that people aren't getting as sick, that they've already gotten sick, but now people are going to be protected from getting the virus at all or from getting sick. The vaccine has just recently started to roll out in the last couple of months. I expect this vaccine rollout to increase at a very, very rapid rate over the next couple of months. The administration in DC is now saying that there will be enough vaccine to vaccinate every American by the end of May. So by summertime, the economy should be fully open and ready to roll. A booming economy is good for the stock market, and COVID going away and businesses reopening is good for the economy. Is there any more good news in 2021? In fact, there is. This man is Jerome Powell. He is the chairman of the Federal Reserve. The Federal Reserve is an organization in the Washington, D.C. federal government that handles monetary policy for the federal government. They control what interest rates banks are charged, what they charge each other, so they absolutely control short-term interest rates. They don't control long-term interest rates such as mortgages, but they have a lot of influence over those. Additionally, they control how much money, how much cash is sloshing around in the economy at any one time. Mr. Powell and his buddies at the Federal Reserve have two main concerns with the economy. The first is unemployment, how many people are or are not working, and the second is inflation. What happens to prices? Are prices increasing very rapidly or are they not? Mr. Powell has addressed where the Federal Reserve stands on these two concerns right now. Downplaying the possibility of runaway inflation, he has said that the Federal Reserve is focused on getting Americans back to work given what has happened in the pandemic. That means that the Federal Reserve is going to keep their foot on the gas in terms of the economy. No brakes, no raising interest rates. It's all the way forward in terms of getting the economy moving in 2021. This means that interest rates will stay low for 2021. Anybody who hasn't already refinanced their house can do so. Refinancing will give them a lower monthly payment, put more money in their pocket because their mortgage payment is lower, and give them more money to spend, which they can, which will goose up the economy and boost the stock market. So that's the money side of the economy. Is there more good news? In fact, there is. This is Joe Biden. He's the president of the United States, and right now he is pushing a $1.9 trillion COVID stimulus bill that is just about to go through Congress. This bill will provide a third economic stimulus bill, which will be yet another direct payment to individuals of up to $1,400. For a family of four, that would be $5,600 of cash that they have to spend. Additionally, unemployment will be extended through either August or September at the increased rate of either $300 or $400. So people who cannot work due to COVID will still have money to spend on groceries and cell phones and rent and boost up the economy, which will boost up the stock market. But what if all this is wrong? What if the bill doesn't pass, people don't spend the money, they save it, the Fed raises interest rates? What if the stock market crashes and I'm 100% wrong? Does it matter? No, it doesn't. It doesn't matter at all. It doesn't matter because the very first and most important question you need to ask yourself when you're considering whether to invest in the stock market or not is, What is my time frame? If I put money in the stock market, when do I need to get it out? If the answer is less than 7 to 10 years, then you need to find someplace else to put your money. You need to put it in a place that is less volatile, has less ups and downs, like a savings account or something like that. However, if you have at least a 10-year horizon, take a look at this chart. This is a chart of what the S&P 500, their returns over certain periods of time. Look at what's happened at 10 or 15 or 20 years. Your chances of losing money in the stock market, if you can leave it in for that period of time, almost zero. Okay, I promised to talk about steak when I first introduced the video. Here's some steak right here. This is prime filet mignon, an excellent cut of steak, or kale if you're a vegetarian. What if you saw an ad like this one? Filet mignon, $12.99, on sale for $2.99. What would you do? Well, if it were me, I would go out to my freezer right here that's full of food, and I would empty that freezer. Make it look like this. Then I'd rush back to that butcher and I'd say, how much filet mignon do you have at $2.99? Let me have all of it. And I'd take all that he had, because I know that filet mignon isn't always going to be $2.99. It's going to go back up to $12.99. And I'd rather buy it at $2.99 than $12.99. Wouldn't you? You're buying it on sale. Stocks are exactly the same way. When they go down, you have a chance to buy solid, good companies on sale. Buy their stock on sale. But most people don't. They don't buy more shares when the stocks go down. In fact, it's worse than that. To continue the steak analogy, not only do they not go to the butcher and buy more filet mignon at $2.99, instead they go into their freezer where they've got filet mignon that they bought at $12.99. They take all of it out and they rush back to the butcher and say, I don't want this filet mignon, here it is, give me $2.99 a pound for it. That's absolutely crazy. When stocks go down, if you don't want to buy more, at the very least, hold on to what you have. They're good quality stocks, especially if you're buying a broad-based mutual fund, an S&P 500 that has a large array of quality, big stocks. That will go back up. And that is why it does not matter whether I'm right or I'm wrong. Because if they go up, then you make money with the stocks you have now. If stocks go down, then you should be buying more, because when they go up, you'll make even more money. That's what I think about stocks. If you've made it this far in the video, thank you. And I would appreciate it if you'd engage with me. Leave a question or a comment down below. I do read all my comments. And until next time, I'll see you later. Thanks.